Ladies and gentlemen, good day and welcome to the Standard Engineering Technologies Limited Q3 FY26 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Monali Jain from Go India Advisors. Thank you, and over to you, ma'am.
Thank you, Steve. Good evening, everyone, and welcome to Q3 and 9-month FY26 earnings call of Standard Engineering Technology Limited. We have on the call Mr. Nageshwara Kandula, Managing Director, Mr. Ramakrishna Kandula, Executive Director, Mr. Venkata Mohana Rao Katargadda, Executive Director, and Mr. Anjanayalu Pathuri, Chief Financial Officer. We must remind you that the discussion on today's call may include certain forward-looking statements and must be therefore viewed in conjunction with the risks that company faces. I will now request Mr. Nagesh to take us through the financials and business updates, subsequent to which we can open the floor for questions and answers. Thank you, and over to you, sir.
Dear shareholders, investors, analysts, partners, and well-wishers, good evening all, and thank you for joining us today. It is my privilege to present to you the Q3 and 9 months FY26 performance of Standard Engineering Technology Limited, a period that marks strong financial execution, strategic transformation, and the laying of foundation for our next phase of global growth. During Q3, we formally completed an important milestone, the change of our company's name from Standard Glasslining Technology Limited to Standard Engineering Technology Limited. Let me be very clear, this is not a departure from glasslining. It is an expansion of our identity to reflect what we have already become. Glasslining remains at the core of our DNA, and it continues to be one of our fastest growing and most profitable verticals. However, over the last few years, the company has evolved into a high precision integrated engineering platform capable of delivering complex multidisciplinary projects with single point accountability from concept to commissioning. The few name reflects our expanded engineering capabilities, our turnkey execution strength, our global ambitions, and our role as a long-term strategic partner, not just an equipment supplier. This evaluation has been deliberate, disciplined, and customer-led. The initiative announced earlier have now been fully implemented during Q3. We successfully completed the acquisition of Filings Private Limited, significantly strengthening our position of bioprocess, fermentation, and life science systems. We acquired a majority stake in C2C Engineering Private Limited, now renamed Standard C2C Engineering Private Limited, beginning process, mechanical, civil, HVAC, electrical, instrumentation, and automation engineering fully in-house. With this integration, Standard Engineering Technology Limited today operates a true end-to-end engineering solution company capable of executing large, complex, and regulated projects with speed, precision, and accountability. While our engineering platform has broadened, I want to reiterate the glasslining remains a major growth engine. Shell and tube glasslining heat exchangers developed with our Japanese partner GL Hako have been exceptional market acceptance. Our 200 units already in order book, 100 units successfully delivered. These products are increasingly replacing graphite and alloy alternatives due to superior safety, life cycle, performance, and reliability. Conductivity glasslining reactors, one of the most exciting developments in our journey is the successful execution of conductivity glasslining reactors. Multiple units have already been manufactured, supplied, and executed successfully. Customer feedback has been extremely encouraging, especially from regulated pharma markets. From April 2027, we will officially launch conductivity glasslining reactors in India. and global markets. Our international partner, IPP, has expressed a strong interest in selling a majority of these products globally, which we see as a powerful validation of the technology. We firmly believe this product has the potential to redefine safety standards in pharmaceutical and chemical processing worldwide. The Union Budget 2026, with a nearly 10% increase in allocation to the Department of Health and Family Welfare, creates a strong structural tailwind for us. Pharmaceutical, biotechnology, advanced manufacturing facilities. For a company like ours, deeply embedded in a precision engineering and turnkey execution, this translates into a long-term demand visibility across greenfield and brownfield projects. Financial performance, strong and consistent. Coming to our financial performance, total income for 9 months, FY26 grew by 23.6% to 562 crores. Q3 FY26 income increased by a strong 37.1% year-on-year to 196 crores. Profitability improved in line with growth. EBITDA for 9 months FY26 stood at 102 crores. Q3 EBITDA increased to 34 crores. That grown 18.8% for 9 months FY26 and by 28.3% during Q3. These numbers reflect disciplined execution, improving operating leverage, and the early benefits of our integrated engineering model. Order book, exports, and we enter the next financial year with a strong and diversified order book. Growing traction on turnkey engineering, glass lining, heat exchanger, and advanced technologies. Export contribute already at 50% with significant headroom for a growth. Robust order inflow in FY27, strong export momentum, continued focus in profitable growth, capital discipline, and execution excellence. Behind every milestone stands our people, our engineers, technicians, partners, and customers, whose trust and commitment fuel our progress. Standard Engineering Technology Limited today is not just a company. It is a platform for long-term value creation. A company built on engineering depth, technological leadership, and global ambition. Thank you for your continued trust and support. With that, we will be happy to open the floor for questions. Thank you all.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and two. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Raman KV with Sequent Investments. Please go ahead.
Hello, sir. Can you hear me?
Yes.
So, thank you for taking my question and congratulations on good set of numbers. So, my first question is with respect to the margin. There has been. Yes. My first question is with respect to the margin. The margin has declined from 18.6 to 15.1%. And in the previous quarter also, when we asked about the margins, you said the margins will be improving sequentially. So I just want to understand what was the major reason for the decrease in the margin during the quarter, or is this the new normal 15 going ahead?
Sir, margins are actually yes, last call I told margin going to increase. We expected this 4.5 million export is happening, but third quarter only 1 million export will happen, and next quarter we are going to do 3.5 million export. That is due to the company name change, and again we went to schematic license. Just we got license and equipment is ready to dispatch. So fourth quarter going to slightly that whatever they declared that profit going to increase in fourth quarter. Due to that, slightly this is decreased our profit. Okay? Any further question?
Mr. Raman KV, does that answer your question?
Hello? Hello?
Yes, sir. Please go ahead.
Yeah. So, just a follow-up on that. How much was the impact due to labor code? Have we taken any impact on the labor code changes?
Sorry.
Hello?
Say again, please.
So,
Your voice is not clear.
have
Please say again.
we taken any financial impact due to the recent labor code
No,
changes?
your voice is not clear.
Yeah. Hello?
Yes.
Hello?
Myself, Anthony.
Mm-hmm.
1 second, sir. So the labor code impact has been evaluated from the management side, and we had already compared with the labor code already. Whatever that basic thing, that 50% gross spend, everything has been compared already. There is no additional impact which needs to be considered in the financial statements.
Understood, sir. And so my second question is, we have acquired two entities, Cygenics and C2C Engineering in the previous quarter, as you mentioned. Can I know what is the current run rate of these business?
Sorry, can you please repeat?
Sorry, your voice is...
Raman sir, can you please use your handset? We are not
Yes.
able to hear you clearly.
Can you hear me?
Yes, far better. Thank you.
Yeah. So I just want to understand that the two entities which we acquired, Cygenics and C2C Engineering firm, what's the current quarterly run rate of this, and how much do you see the potential to scale this business?
This is actually, these companies, whatever we acquired, that companies are size-wise very small. Our strategy also, earlier also I said same thing, but the technical and intellectual value is very high. And C2C, maybe this year they are going to touch maybe 22 crores revenue. Next year we are targeting going to at least to double or triple their revenue. That is possibilities are there, and C2C revenue. And standard Cygenics also maybe after they came to standard technology under, maybe 25 to 30% growth is going to happen in standard Cygenics also. So both companies have bright future. Total addressable market is very high, but due to some their management constraints, some their growth is not happen. Now we are pushing things, and we are introducing our whole customer base and domestic and globally. So very bright futures are there that both companies.
Understood, sir. And sir, we only in the previous quarter you mentioned we have acquired 51% stake. Are we planning to acquire the remaining 49% stake in C2C?
Present, no. Present, their management will continue. They are very strong in engineering. They are very good people, old management, and they have 20 years experience. They have very, very good contacts in the market. We are also happy to their continuity. They are very strengthen our technical and engineering aspects.
Understood, sir. Thank you.
Thank you.
Thank you. Ladies and gentlemen, if you wish to ask a question, please press star and 1. The next question comes from the line of Kaushik Mohan with Ashika Group. Please go ahead.
Hi, sir. Sir, I have just a small understanding over here. Can you help me with currently also last quarter we told that there is some exports which will be delayed. Again, it was going to come in Q3. Now we have the reason by telling that we have changed the name, and that's the reason this exports is not happening, right? So will this be passing on, or it will be in the same inline for the Q4? Are we going to meet our growth guidance, whatever we have suggested?
Yes, you are exactly correct. And 4.5 million, 1 million completed Q3. 3.5 million is almost in packing condition. That is going to complete in Q4. So whatever we committed, 13% export, that is going to be reached. That we are going to reach 100%.
And on the sales side, we have grown on a YOY basis around 36%, 37%. On QOQ, we've grown around 4.8%. But when we look at on the gross profit margin, we made a gross profit of 38.9%. But when we look at Q2, we made around 35.6. There was an improvement in the gross profit. But when it was flowing down to EBITDA, I can understand the employee cost, that is because of labor code. But also when we see our total expenses, that is also increased as per the revenue. So is there any, why? Because majority of costing is coming under other expenses. If possible, can you give more clear understanding on other expenses? Why is this too high at this quarter?
Yeah, Kaushik, I'll just give you the logic behind this. One second, sir. I'll just give you the logic behind this. Maybe what you observed is perfectly right. So here, there are two reasons. One is increase in the employee benefit expenses. We are recruiting the people at the high level to get into the new end user industries as well, and we are building the team to get into the new end user industries. That is one reason. And second one is the increase in other expenses, mainly due to the increase in the consumption of the consumable item, which will be primarily used in the projects. So because of which these two expenses have got increased in the current quarter and by as well.
Okay. So that means that can I understand that Q4 this will not happen and the Q4 margins will improve? Is my understanding right?
Because since we have recruited the manpower also, this will get yes.
Sorry?
Please continue.
Yes. Yeah, since we are recruiting the people, this will be the. Yeah, you can tell, sir.
Can I tell? Can I answer?
Yes.
Q4 is going to complete the whatever balance export, and also growth also good. So profit going to Q4 is going to increase.
Got it, sir. So, sir, then that means that our Q4 numbers will be more better than whatever we can expect. Because whatever has been one-time costing over here, it will not be considered there.
Yeah. Mr. Kaushik, last year also we announced this year we are going to grow 25 to 25%. 20 to 25% this is going to grow. No more than, maybe more than.
Thanks, sir. That will help for us on the growth part. And sir, one clarification only. Like recently we have pledged our shares, right? Can we understand what's the reason, if it is possible?
That is only promoter personal perspective only said this year. That's nothing related with company. Company has cash in banking cash 50 crores, and even though CC also today we are using only 40 crores CC. This business is growing, and quarter on quarter, and CC limits also we are using only 40 crores. So cash flows, company cash flows, company cash everything is very strong. This is only promoter's personal purpose we think. That's all.
Okay. Thanks, sir. That helps us a lot.
Thank you.
Thank you. Participants, if you wish to ask a question, please press star and 1. The next question comes from the line of Ram Arvind with iThought PMS. Please go ahead.
Hi, am I audible?
Yes, sir.
Yeah. So thanks for the opportunity. And just a question on the shell and tube glass-lined heat exchanger. So this is going to have a considerable amount of our top line starting from FY27, right? So I want to know if we have what sort of order inquiries do we get? That is, from which segments or which sectors do we get order inquiries for the high alloy heat exchangers, not the glass-lined one, but the normal high alloy heat exchangers. That's my first question.
Can you speak? Hello, excuse me. Can you ask again question? Please loudly. Your voice is not coming properly. I am out of country. That's it. Please tell me.
Yeah. Can you hear me now?
Can you speak loudly, sir? Oh, yes. Now, yes.
Yeah. So apart from the glass-lined shell and tube heat exchanger, which we are going to be starting on full flow from FY27, which is going to hit our top line. So I want to know what other heat exchangers, so which is the high alloy heat exchanger, which segment is this mainly being catered to? And that's the first part of the question. And secondly, do we have a steady order pipeline, or do we have inquiries from the petrochemical and oil and gas sectors? That will be my first question, and I will come to the next question.
This heat exchanger is replacing silicon carbide, high alloy heat exchanger, and graphite, particularly graphite. Graphite is 80% industry using because of low cost, but with the pre-vacuum failure and particle issues. This is the solution we are providing. And high alloy also a lot of limitation is there. Coming to silicon carbide, price is 5 times compared to this glass lining. This glass lining life also very long life, at least minimum 15 years. So this 3-4 areas of MOCs we are going to replace. And during my speech I said 200 we could, but we are limited because of April onwards we are going to fulfill. Our capacity in Japan also we are expanded plant, and India also we build the new plant. This is going to complete coming 4 weeks. So April onwards our capability is we can produce 300 heat exchangers per month, and average price we are considering 12 lakhs rupees heat exchanger. But how much immediately 300 maybe we can't tell. Every month we are targeting first quarter at least to 100 each month, 150 we are planning to sell. This is a big market. India has 2 source opportunities, shell and heat exchanger. Global also there. Global also we are global requirement purpose, CE, Europe and US market purpose. We are planning to start some sample equipment, and our global partner ITC also waiting about this product. Because of the high alloy equipment life is 4 years, 5 years. But US many people they don't bother about cost. But 4 years after 5 years this is going to failure again the supply. But this is going to be a permanent solution to market.
Okay, thank you, sir. So, but since already our revenues is close to 80% above with catering to the pharma sector, right? And even the glass-lined shell and tube exchanger will again, I assume that will be going towards the pharma sector. So, how is the revenue diversification happening here?
Pharma is required, but I sold in India first heat exchanger. I sold to SRF. Later then I sold to Deccan, and I sold to Anupam Rasayana. These all chemical clients. But I received recently CDMO players, many CDMO players. Sai is given recently big order, Sai Life, and almost I think single order 45 numbers we received from Sai Life, 45 something like that. We are the unique, and so this product no alternative suppliers. So this is very big. But we are now, once we start in India assembly center, then we can pick up. But equally, this product is required in chemical and pharma. Maybe petrochemicals less, not much. But pharma and chemical, and this area is very, very much required.
Okay, sir, understood. On the high alloy heat exchanger, so which sector do you mostly get orders from, sir? Is it from the oil and gas? Or petrochemicals? So for the high alloy heat exchanger, which sector do we get orders?
Wherever high alloy heat exchangers are using in oil and gas, also that place also we can replace. But based on application, suppose vapor and coolant also both are corrosive, the heat exchangers are not suitable. Wherever one side corrosive, second side is coolant, is normal media, and we can use useful. Some areas, yes. We are Gujarat fertilizers also, GSLC also we are discussing for there. They are facing many problems. They are importing heat exchangers. A lot of discussion is going on. But we are not fully ready. That's the reason we are slowly launching. But God grace, successfully we supplied 100 numbers. All are happy. And clients are asking again when we are going to supply. But recently we announced we are going to supply April onwards full. We have started order booking. And the prices also, wherever now, earlier prices are very high from import from Japan. Now, recently, we reduced another 20-25% prices to heat exchangers. Our aim to sell more heat exchangers into the India market. And at the same time, our revenue growth, and at the same time, our customer going to get benefit. This is our aim.
Okay, sounds good, sir. Thank you very much. Just one last question on the C2C acquisition. So can you just help me to give some light on what exactly C2C does and how it's going to help with your engineering capabilities? Apart from equipment sales, like how you're going to transition to a solution provider.
C2C acquisition is actually last 3 years back we decided our product company to slowly become a solution provider. So based on the in-house engineering team is there, we are doing our capability is 4-5 projects at a time we can handle through engineering team, in-house engineering team. But more demand from market, more demand day by day increasing, and also suddenly we got opportunity, C2C opportunity. C2C, a 20 years old company, they build scratch to complete plant high engineering plant, Deccan, Berger, Bayer, and many companies. They build duct readies, granules, they work with many pharma and chemical both, and paint industry also, and food also, and even their battery reprocess plants also they build. They will give complete basic concept to completion. Means they will give, suppose anybody who have land, they will give full concept, they will provide basic engineering, they will provide detail engineering, they will complete engineering, they will provide. And the standard engineering technology is producing 80% in-house equipment. So we are capable in-house equipment manufacturing and supply, commissioning up to water train. So we have now full capabilities, end to end. Earlier also we have in-house engineering capabilities, but after C2C acquired, C2C have high engineering technology. So based on this, we are complete solution provider. We become a complete solution provider. This is only one company in the world. So you can look into you can search in web also, you will understand. Many engineering companies are there. Many equipment manufacturers are there. Many equipment means independent. Some company will manufacture one equipment, some manufacturing companies will manufacture 2-3 equipment, companies will 10 variety of equipment. But here coming to, we have engineering capabilities and 95 variety of equipment we are in-house manufacturing. It's not only manufacturing, we are supplying, commissioning. We are taken to our responsibility. So customer also feel happy. So we are providing complete solution. That purpose we are acquired C2C.
All right, sir. Yeah. Thank you, sir. If there's any more questions, I'll join back in the queue. Thank you.
Thank you.
Thank you.
Ladies and gentlemen, if you wish to ask a question, you may press star and 1. The next question comes from the line of Krishna, an individual investor. Please go ahead.
Good evening. It is audible?
Yes, it is audible.
Yes, audible. Sir, can you speak loudly?
Yeah. I was checking this Q3 financials. I understand there was a jump in the inventory by 20 crores in absolute terms. May I know the reason for the same? Why there was so much jump in the inventory?
Sorry, your voice is low, sir. Can you answer that question? Can you understand that?
As he explained already, as he explained for MD, sir. So most of the export equipments are also ready, which is there in the inventory, which needs to be delivered in this month. Because of that inventory levels are high. That is one thing. And second one is we have acquired the standard Hygienics as well, right? So there is some inventory over there, which is not there in the Q3, which is not there in Q2, which is there in Q3. These are the two reasons, primary reasons.
Okay. If we see the for financial year 26-27, consider 27-28, considering the recent acquisition of C2C and what the subsidiaries we have incorporated in the US, what is our revenue top line expectation for 27-28 in the absolute terms?
So Nagesh sir, can you answer? Top line for the 27-28 financial year after considering the acquisitions of C2C and standard Hygienics.
Yeah, considering the US it got incorporated, the subsidiary of our standard engineering.
Yeah.
Sorry to interrupt, sir. Nagesh sir got disconnected. I'll reconnect him. Just a second.
Yeah.
Ladies and gentlemen, the line for the management has been reconnected. Please go ahead. Krishna, could you please ask your question again?
So I was checking for financial year FY 27-28, what will be the revenue guidance considering the recent the acquisition and the subsidiary what we incorporated in the US?
Nagesh sir, can you hear us? Ladies and gentlemen, the line for the management has been disconnected again. Please wait while we reconnect them.
Hello?
Oh, yes, sir, I can hear you. Please go ahead.
Yeah, as per the earlier discussions also, I think he has mentioned in the earlier calls also, our objective is to grow our revenues at as per 25%. Our objective is to grow at 25%. We continue to grow our revenue targets at that same level. It may go up also considering all these things, but our objective is to grow our revenues at 25%, which is clearly evident based on the nine months revenue, current year 9 months revenue versus previous year 9 months revenue as well. So our objective is to grow like that.
Okay. One last question. What will be your revenue contribution from the US market?
Sorry, come again?
What shall be your revenue from the US market? Revenue contribution from the US market?
You mean to say for FY 2026-27 financial year?
I'm speaking for 27-28. 26-27, I mean. 27-28, not 26-27.
Yeah, 27-28, it will increase significantly. But our long-term objective is to increase our export revenue significantly, considering the collaborations that we have with Biocon and IPP.
Okay. Thank you. That's all from my side.
Yeah.
Thank you. The next question comes from the line of Maitri Shah with Sapphire Capital. Please go ahead.
Yeah, hello. Am I audible?
Yes, ma'am.
Yes.
Yeah, hello.
One second, sorry. Sir, can you connect Mr. Nagesh sir once?
Yes, sir, he's connected with us.
I'm there.
Okay, thank you.
Yeah, can I go ahead?
Yeah.
Yes.
Okay. Firstly, I wanted to just check in about the two acquisitions that we did, the Cygenics and the C2C Engineering. Could you repeat the current revenue per quarter of both of these companies?
Yeah. So,
What is that?
Hello?
Yeah.
So your question is like, what is the revenue from the Cygenics business and C2C business in the current financial year, right?
Yeah, correct. And not including them in our books, just on the standalone basis, what both of these companies are earning?
Yeah, based on the previous financial year, their revenues were somewhere around 25 crore, and current year it is expected to grow, expected to touch financial year 26 expected to touch somewhere around 40 crore. In the case of standard C2C, and in the case of standard Cygenics, it is going to touch somewhere around 35 to 40 crore in the current financial year, without considering the effective date of the acquisition date, I'm telling.
Okay. And we're expecting a 25% growth rate for FY26 as well, for this current year, fiscal year as well.
Sorry, come again. Your voice is breaking bit. Can you please repeat?
Yeah, so for FY26, are we expecting a 25% growth in the revenue as well?
Yes.
Okay.
And it is very clearly evident from the 9 months to 9 months as well.
Correct. And since you said that we had a delay in the exports for quarter 3, and most of them are going to come in quarter 4, what sort of sustainable margins do you see? Because now we'll see a year-on-year increase in the export sales as well. So what sort of sustainable margin profile you see in the EBITDA level going forward from fourth quarter FY26 and also from FY27?
Yes, madam. It's going to slightly increase, and revenue also, where we are expecting very good growth in next 27. Q4 also.
Any sort of number you could give on EBITDA? Any number you can give on the sustainable margins we can use?
The present margins slightly going to increase, madam. That I can say. Figure number wise we can't, but slightly we are going to increase. Better position.
And exports, this year we are targeting at 13% of our total revenue. What goal do you have in the next 2 years from exports? What sort of contribution do you expect from exports coming in? Can we reach a 25% number? Is that possible?
25% maybe next year, maybe not possible. Chances are there, but not sure. But we can reach 15 to 20%, surely. 15 to 20% we can.
Okay. That is great. And what differential do you have in the exports versus the domestic sales? So how much more margins are we earning on the export side of the business?
Export always better, man. Export usually is always better.
Correct. But any number you can give? Like what sort of differential do you have percentage-wise?
No. We can't disclose that type of detail profitability. Okay?
Okay. Makes sense. And it was mentioned in the... Correct. In the presentation, we have mentioned that we are going to incur 130 crores of capex in the next 2 to 3 years. What sort of capex amount are we going to incur in FY27? And if you could kind of explain what are we adding to the capex? What capacities are we adding?
Existing facilities, we are already started investing this year. How much this year you invested, Anjan in capex? What do you till date?
30 crores till current year.
30, sorry?
Current year 30 crores, and totally somewhere
fourth quarter also we are going to invest another 20 crores. And existing facilities we are improving, and that improvement maybe another 30, 40, 50 crores. Total 200 crores grass block. Capacity we are creating 2,000 crores. And greenfield also we are building the one more project that is we got permission, and in first phase we are going to build some 4.5 lakh square feet we are going to build in the first phase, and 2-3 lakh square feet we targeted 27 to complete.
Target is to complete.
That is almost all that expanded that capex investment, maybe greenfield investment, maybe first year, maybe next year, maybe we are going to invest 70 to 100 crores between we are going to invest on that project.
Okay. And this will be commissioned by when?
This 1 year it will take. 27 financial year, first phase maybe availability to start the production.
Okay, so 1 year for commissioning and 70 to 100 crores is the capex. Is that correct?
Yes, that is greenfield.
That is greenfield. Yes, greenfield. Okay. And close to 30 to 50 crores next year will be invested in the existing plant.
Yes, madam. Correct.
So a total capex. So a total expenditure of 100 to 150 crores on capex will happen in FY27.
Yes.
Okay. Yeah, that is it from my side. Thank you and all the best.
Thank you.
Thank you. Ladies and gentlemen, if you wish to ask a question, please press star and 1. The next question comes from the line of Sai Kumar, an individual investor. Please go ahead.
Yeah. Hello. Am I audible?
Yes.
Yes, you are.
Yeah. Thank you for giving me this opportunity, sir. So my question is on the shell and tube glass line heat exchangers. So you said from April you are going to commence 300 units per month. So like if you want to reach, so for example, you are starting with 100 units per month. So how much time it is going to take for you to reach the 300 unit per month capacity utilization? So what is the time frame you have in your mind?
We are creating day one 300 heat exchangers capacity in Japan and India also, same way. Because of 80% equipment we are manufacturing in Japan and 20-25% approximately we are manufacturing in India. So both places we are creating capacity. Once launched, customer acceptance is good, and we based on customer response only. But capacity we are already going to create April month onwards 300 numbers. That is customer based on customer acceptance. Once the customer wants customer's order is 300, we can supply. But that's the reason 1 month immediately maybe we will not get the order 300 numbers. That's the reason I said 100 numbers comfortably we can book per month. That is we are planning.
So initially you are going to start 100 per month, and slowly by year end or 1 year or 2 years you will reach 300 unit per month. That is
not 1 year. We have to see. We want to see as soon as possible. We want to utilize the capacity full fetch. That is our target. Because we are producing every month 150 reactors every month, and that every reactor is required 2 heat exchangers. That purpose only we created 300 heat exchanger capacity. And other competitors also every month they are producing 600 reactors. All other manufacturers that 600 also required heat exchangers. But that for this part the others don't have. So that opportunity also we will get. So that's the reason. Next year, I hope 100% I am sure also. Next year we are going to become the largest glass lining equipment manufacturer in India. Some people some people are claiming 50%. I am the market leader like that. Not 50%. I am going to tell confidently. So we are going to become the largest glass lining equipment manufacturer in India. This is not only challenge to glass lining heat exchanger. Reactors also without gasket we launched. That is high responsible from clients, and conductivity glass lining reactors. And recently Laurus Labs given one big order, and Hetero is they build me one CDMO plant. They are given conductivity glass lining order, and big price, very high response. Earlier Sun Pharma is facing static issue, and they are given one reactor order. We supplied successfully. Wherever we supplied, Laurus Labs is to be supplied, but Hetero and Sun Pharma we supplied. They are very happy. This part also don't have any alternative competitors. And Europe, based on we explained Europe and US markets, we are going, our partner IPP going to sell. So these all things we consider. We are going to become the largest glass lining equipment manufacturer in India, 27 financial year.
okay. So one more question, sir. Last year your sales is around 615 crores, and this year you are telling around 750 crores, and exports will be 13% of the revenue. So my question is, then last year sales no exports, so we are just growing like around by 5% in the domestic sales. So my question is like, why so low growth in the domestic sales?
No, not low growth. This is manufacturing company. This is not a manufacturing creating capacity. We are increasing capacities, manufacturing capabilities, and adding manpower. This year we are growing 25%. So next year maybe more and exciting year next year. So growing, that is export and domestic. Why we are more focused on export? Because of high margins.
Okay, so exports you
not
are
a domestic. We are focusing more export. So high margin purpose of high margins. So that is domestic growth or export growth is ultimate growth is important. High profitability, top line and bottom line both are important in any business. That is we consider.
Okay, so export. That was my question. Like, but margins are still coming down, because as you're telling exports, you're trying to increase. As you said, margins are bit high for the exports. But as you see, the margins are bit coming down. So can you please quantify what was the reason for coming down?
I said for Q3 we are expected full for 4.5 million exports, but we did only 1 million, and Q4 we are going to do 3.5 million. Margin slightly going to increase. Next year we are targeting EBITDA is more EBITDA. We are targeting next year very high excitement year. I can say confidently.
Okay. Yeah. Okay, sir. And can you please just tell me what kind of orders you are having for shell and tube glass line heat exchangers? Like how much quantity you are?
Currently,
In the previous call you said
currently,
you're completely booked. So can you please tell the numbers per month? How many? Like
that's the reason. Now, presently we don't have that much capacity, but completely booked means whatever capacity Japan is sending to India, that capacity we fully booked. Currently we are ordering adding, I think 120 numbers in hand, ordering hand. So April onwards we are going to full page. That is answer.
sorry, I missed your how much orders here?
Ordering hand 120 numbers in ordering hand now.
120 numbers. Okay. Okay. Sir, and what is the one last question? What is our cash flow from operations?
Cash flow from operations, Anil, this is how much this cost?
Yeah. So approximately this, as on today, it is somewhere around 15 crore, but as on 31st December, it is 2 to 5 crores, sir, cash flow from operations.
Okay. Going forward, we are expecting increase in, right?
A significant inflow we are expecting in this quarter. By March 31st, we are going to get significant cash inflows from the collection of the debtors and from the business as well.
Already improved, sir. A lot of improvement is happened compared to last quarter cash from operations. This year, March 31st, how much you are expecting on year approximately?
50 to 70 crores positive, sir. Cash flow positive.
For 50 to 70 crores, we are going to positive cash flow.
Okay. So, and like, what is the EBITDA per CFO range? Can you please, like, what is the number if you can give us?
So, yeah, EBITDA will be somewhere around, 750 into, so EBITDA is approximately 30 to 40% out of EBITDA.
Okay. Yeah. Okay. Sir, can you give us some order?
I'm sorry to interrupt. Sai Kumar, could you please
thank
come
you,
back
thank
in the
you.
queue for?
Yeah. Thank you.
Thank you.
I'll come back in the queue. Thanks.
Thank you. The next question comes from the line of Raman KV with Sequent Investments. Please go ahead.
Yes, sir. Thank you for the follow-up. I just want to understand the reason for the promoter pledge. I didn't quite get why there is an promoter pledge.
This is personal purpose, sir. This is nothing related with company.
And are you planning to, by when do you have planned to remove the promoter pledge? Is there any timeline?
Maybe max 6 months. Maybe early also. I have planned.
Understood, sir. And sir, just one doubt on the order book part. What's our current order book?
Sir, next we are not decided to disclose the figures order book because I don't want to take my competitor advantage. But next year, I am sure better than this year. Please trust me.
Understood, sir. Thank you.
Thank you.
The next question comes from the line of Kaushik Mohan with Ashika Group. Please go ahead.
Hi, sir. Thanks for giving one more chance. Sir, it was like, I think someone previous to this question, someone had a question. The question was like last year sales was around 615 crores, and this year we are in the run rate of doing 25% growth. And if we assume 13% to be our overall exports, that means that this year numbers will be on the domestic sales will be around 625 crore. So last year, so this year is only 10 crore up. But when we see our execution in the ground, that we feel that majority sales is coming from domestic. So how are we going to capture this? Like, how are we going to do it in the next year as well as this year? These numbers, how are these going to be changing?
Like what happened, Mr. Kaushik, we are focusing in the export mode, but not domestic. They're both important. Domestic important, export. But wherever good opportunities are coming from export, we are because of high margins. So we are focusing that. Ultimately, company year on year growing is important. Growth is important, and top line and bottom line also. But ultimately, domestic, we are looking domestic this much growth, export this much growth. We combined growth is 25%. That we targeted, we are achieving. That's all.
Got it. Great, sir. Great, sir. And sir, last question from my end. Just can I understand by current acquisitions and by current run rate and the factory which is coming up on the larger scale, by this, considering this, next 3 to 4 years can also we expect 25% plus growth is my understanding on the revenue side, as well as if that is 25% on the revenue, then PAT will be around 25 or plus because of operating leverage that we have. Is my understanding right?
No, PAT, what is the PAT?
25% plus growth.
No,
profit after
PAT,
tax.
how can you not? Sorry?
My question was, this year we have reinitiated that we'll do 25% growth, and with the same growth,
Yes.
can we achieve for next 3 years also? Because I think on the ground our factory is coming up and everything is happening, right? So if the top line is 25% growth rate, then can we expect the same growth rate in the PAT, profit after tax?
Yes, profit and EBITDA also going to increase and PAT also going to increase. And also next year maybe more than 25, not 25%, more than we are going to grow is in our organic growth, not inorganic growth. Organic growth only, we are going to more than 25%.
Got it. Thanks, sir. This was.
We are very, our business fundamentals are very strong. That's the reason our company name also, a lot of people are confusing because of standard glass lining. Glass lining as our core engine, growth engine, unique parts. Others don't have this type of glass lining business also. But we are strong. But compared to our glass lining, other divisions are growing very fast, more than fast. So that's the reason our company name also changes. And so organic growth and wherever engineering opportunities we are grabbing. We are high precision analytical engineering company. So our precision engineering is going to be our growth engine next coming years.
Thanks, sir. And I'm really happy that you really clearly mentioned that in next 6 months the pledge also will be removed. So we are really happy for that. Thanks, sir. Thanks.
Maybe I'll try to early.
Thank you.
Okay.
Thank you. The next question comes from the line of Agam, an individual investor. Please go ahead.
Yeah, hi. Thank you so much for the opportunity. I just wanted to know the revenue contribution from glass line, shell and tube heat exchanger.
Can you speak loudly, sir? Your voice is very low. Can you?
Yeah, I'm audible now.
Agam, can you please use your handset, please?
Yeah. So yeah, thank you for the opportunity. I just wanted to know that the revenue contribution from the shell and tube glass line heat exchanger for this quarter.
This quarter maybe some. How much are you there? 4 crores or 5 crores?
Yeah, 5 crores, sir, approximately.
5 crores.
Oh, okay. Yeah. Thank you.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand the conference over to the management for closing comments.
Thank you. Thank you all for joining call.
Thank you. On behalf of Go India Advisors, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.